In this video, I'm going to interview Wayne Basford. Wayne is a very experienced registered company auditor and the signing engagement partner on a number of large listed groups. Wayne has also acted as an expert witness in a number of court cases that involves alleged audit failure, which usually involves group audits. So Wayne, do you think are the top 10 errors when planning a group audit?
Key error: accepting or continuing a group audit that you've not got the ability to give an audit opinion on. 2, the component auditor lacks either the resources or competence to provide sufficient appropriate audit evidence to the engagement partner. 3, not involving the component auditor in planning and risk identification and not including them in the ETD. 4th, inadequate involvement by the engagement partner in the planning of the component auditor, the risk identification of the component. Simply, the group engagement partner does not adequately understand the component, does not understand its business, does not understand its operations, and therefore is unable to identify the risk of material misstatement at the component. An unusual feature where it goes wrong in planning a group audit is group auditors tend to miss the risks that come out of the consolidation process. And if you don't identify a risk, you don't actually plan procedures to address that risk. A fundamental principle of planning is that planning is a dynamic, continuous process. Therefore, planning needs to be updated throughout the audit. And therefore, a failure in planning is we just didn't update it. A horrible issue in terms of audit failures and where it went wrong is actually not applying the correct level of professional skepticism when you're trying to identify risks, when you're trying to say what could go wrong, what causes the risk of material misstatement, and not factoring that into the risk identification processes. Next, linked with skepticism, not adequately considering or understanding the fraud risk that leads on to a risk of material misstatement in a group set of financials. And again, linked with the risks that are associated with dispersed group, not considering or understanding how head office monitors the component and what controls are in place to monitor the component and to see whether there are material misstatements flowing through to the consolidation.
When you're planning your next group audit, make sure you're able to take these top 10 errors into account and avoid making these errors when you're planning your next group audit. We will discuss each of these errors in more detail in the next videos, so stay tuned.